real money's doing a stressed index. The stocks that are stressed out because of their balance sheet. Everyone wants to know about GTLS. That's the old gas to liquids corp. And you know what? That is certainly a stressed stock. Why? Because so much of their business was that there would be engine shifting to natural gas from oil. With oil coming down so much, that switching has been ground to a halt, which is why that stock is not a place you want to be right now. All right, what's going on with Whole Foods? It was down earlier this week by Opco. They took it to an outright sell. The stock had been hanging in above 30 ever since they announced that last quarter, and they've been buying back stock. Without a further analysis of what the company's doing or a new game plan, or maybe, as the reader suggested, change of executives, although I don't think that's true, Opco says the stock could go to 23. Frankly, I have to tell you, I think that this company on a square footage basis is getting very, very attractive. Let's see the bad quarter. Maybe they outline the new ideas for the smaller format store and we take a bite. But right now it's still expensive on earnings. Right? Whitewave was sliding and then it stopped sliding, so let's be very specific here. Hain did not make its numbers. That brought down the whole group. There is a sense that the whole group is being carried away, one, with Whole Foods going down, and two, with knockoff for natural and organics. In other words, if you look at Treehouse's, the Treehouse is a very successful company that does a lot of knockoffs. If you look what they're doing, they're actually competing with Whitewave. Why do we therefore own it for ActionAlertsPlus.com? Because we believe that plant-based foods are the future, and Whitewave has the best plant-based foods. Is it a cheap stock? No. That's why it has come down from 52 down to 35, 36, now 37. Do you want to see how the quarter is? They made the quarter last time. Do you want to see a consolidation in the industry? I have always said on Mad Money or for Action Alerts, which this is a very big name, if you have a company that's good on the fundamentals and you think it can be taken over, it's a buy. I like Whitewave right here in the 30s. Alcoa is a really interesting situation because half of Alcoa is something that nobody wants. It's a commodity play that makes aluminum, okay, and alumina, and people just think that's China. It might as well be iron ore, it might as well be steel. I think it's better than that because Alcoa happens to be a lower cost producer because of their supply of bauxite. The other side is the engineered and proprietary side of what they're doing with aluminum, which is lightweighting when it comes to trucks. You've seen the military-grade Ford ads, no doubt. Also, they're putting a lot of part of the aircraft engines and also the screws or fasteners that go into aircraft engines. That's doing very, very well. They are using this material to be able to make mini mills that I think are going to go well. That part is worth the whole stock. So what I'm saying is at 6.7, you are getting the aluminum part for free when they break it up, and therefore I like the stock. All right, DuPont is merging with Dow. Now, yesterday's DuPont call was a little bit of a downer. Why is that? Because ag is not so good. Some of the materials and chemicals aren't that good, but they did say they're going to be buying back $2 billion worth of stock, which I thought was odd given the fact that they're merging with Dow. And I do think that Ed Breen has produced a lot of wealth. Now, here's what you have to think about with Dow and DuPont. They're merging together, Dow and ActionAlertsPlus.com name. When they get together, what will happen is that Ed Breen, who split up Tyco and created all that wealth, take a look at the Johnson Controls bid just the other day, is going to give you 3 companies. I think 3 for the price of 2 is what you should be looking at. I think DuPont's a buy. I would stay long in here, and I do think the ag cycle can turn around. It is difficult to own stocks that are in mergers right now, whether it be Newell Rubbermaid or whether it be with, of course, is merging with Jarden, whether it be Hot, where we've been hurt badly in Action Alerts, or which is merging with Marriott. But these deals will close, and when they close, there's going to be great value. Have patience. They're all too low to sell. GoPro is a stock that I have been very, very negative on. I managed to be able to catch a peek in that. We had been saying we liked it. It would be a Christmas stock, and then when it got too high, we said look out, and I haven't looked back since. I still think that GoPro is an overvalued situation. I think that Ambarella got overvalued. Remember, these are stocks that are speculative stocks in an environment where you get 3M selling at a low price, Johnson & Johnson selling at a low price. So the market, the professionals like to trade out of this spec and into the more highly valued blue chips.
To get more of Jim Cramer's investing ideas, as well as a peek at other stocks he owns in his multi-million-dollar charitable trust portfolio, subscribe to Action Alerts Plus. Sign up for Action Alerts Plus at getcrameredge.com. That's getcrameredge.com.